Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, November 12th. Yesterday, Veterans Day. Want to just give everyone a shout out, all those who have served or are currently serving in our military. I want to express my gratitude, really appreciate it. Yesterday, we did have the bond market closed, but the stock market was open. We're going to get into all that in just a minute. But first, Zach, I got to say, this was a big weekend out there in Seattle, so I got to give another shout out to everyone in Seattle. First, you go out, you win the Major League Soccer championship. The Sounders are champions. Woo-hoo. Yeah, and then last night, big win in San Francisco for the Seahawks.
My word, that was probably the most exciting game that we've had against San Francisco since they were doing the division title going into the Super Bowl. So,
yeah, I mean, this was crazy. Yeah, it was a good game. I mean, we've had a lot of clunkers on Monday nights. Some of these live games haven't, or the heavily promoted games haven't really been that good. But this one lived up to its billing. I mean, that was a really good game, back and forth, lots of turnovers, defenses making big plays, goes into overtime, kickers making big kicks, missing big kicks. Maybe not so great decisions. I think there toward the end, I actually didn't stay up for the overtime. I couldn't take it.
Yeah, it was crazy. It was a bit too much. I was having a hard time, but oh well. It.
I would have thought late in that game in the overtime with about a minute and a half left or whatever, when Seattle, I think, ended up having to punt back to San Francisco. Seattle had no timeouts. San Francisco's got the ball. There's only a minute and a half. And at the end of overtime, game's over.
Yeah.
So you gotta think from Seattle's standpoint, the best thing they can hope for is a tie.
Yeah,
and
totally. That's what I was hoping for.
Yeah, I mean, San Fran threw it 3 times, incomplete. And so used almost no time on the clock, gave Russell Wilson one more chance. And we know what happens when Russell Wilson gets one more chance.
Yeah, it's good for us when Russell Wilson gets one more chance.
Yeah, not so much for San Francisco. But anyhow, just had to bring that up because it was a big weekend out there in Seattle, I know.
Yeah, it was definitely a fun day, but we'll get into the show, and maybe me and you will talk later offline.
Yeah, we'll talk a little bit more later. All right, let's get into it. You can see there the agenda for today: daily market recap, earnings spotlight, upgrades, downgrades. Going to get into scooter movers today. I want to show you a couple interesting things there, and then we'll wrap up the show with 3 you must see. But first, let's get into the daily market recap. Yesterday was just kind of a, ho-hum kind of a day. The Dow, it started off weak, and of course the headlines: trade war. It's like, okay, whatever, give me a break. I think the market has moved past the trade war. Just the way the market has been trading tells me that the trade war is probably in the rearview mirror. Doesn't mean we're not going to have some hiccups now and then. Doesn't mean that there's, not going to be some scares from time to time. But I think for the most part, the Wall Street is acting as though it's in the rearview mirror. Dow Jones was down over 100 early in the day, came back, actually finished higher. It was the only one of our major indices that finished up on the day, finished up 10 points. Part of that was Boeing and Walgreens. Boeing announced that their 737 would be back. I think they had said that their deliveries would resume in December and their commercial service in January. I'm pretty sure that's what they had announced. And then Walgreens received a leverage buyout offer from KKR and Company. So between those two, they really helped to lead the Dow back and into positive territory. The S&P, not quite so fortunate, although it did come off of its lows, as did the NASDAQ and the small cap 600, but they all finished down on the day. The S&P down 0.2%, NASDAQ 0.13%, and small caps 0.3%. So not really much there. 10-year Treasury yield continues to move above that 190 level. It actually is down about 1 basis point today, but still up 1.935, breaking above that September high at 1.90. I like that. We're still, some might say, well, we don't want higher interest rates. Actually, we do. We don't want rates sitting down here at all-time lows or near historic lows forever. We want to see things start to return back to normal a little bit. And I think the yields moving up certainly will help that. Moving above 190 is big. I think 2 to 210 is going to be the next step. And if we can continue to stair step higher with higher highs and higher lows, I think that will coincide with a rising stock market. As far as sectors go, real estate was up yesterday, but you can see clearly in a downtrend. The other side, or one of the other areas of the defensive groups, utilities, was the worst performer yesterday. So you can see both in downtrends, but we did have at least a pause for real estate. Aerospace, as I mentioned, with Boeing having a strong day, aerospace moving up, not yet ready to break out, and I'm still a little nervous about the Boeing chart, so I would probably hold off on Boeing for a while. Home construction had a very nice day yesterday. It's been in a downtrend here over the past few weeks, but most of that downtrend has coincided with a really strong run up in the 10-year Treasury yield. So as the Treasury yields move up, it's not that home builders can't thrive in this interest rate environment. It's still very, very low, but it was time for a pause. I mean, this group had been straight up over the past few months. We're getting that little bit of a rest. We'll see what happens from here. I think it's probably going to be in a trading range. I think home construction goes higher down the road. I just don't know that it's going to be a leader with interest rates moving higher, because I do think rates continue to go up. Toys, not a very good day yesterday. Actually closed below all of these prior closes. So when I look back about the last 2.5 months, looks like we've lost this gap support and these recent lows. So you want to be careful in that toys group. That was a group that had really been leading throughout most of the summer. Seems like maybe we topped in September, though. Now starting to put in lower lows and lower highs. I'd be careful, especially if that selling begins to accelerate here in the near term. As far as the market summary goes, let's take a look here. When you go into the market summary page, you can get a lot of the major markets around the globe. You can also get the major indexes, sector, ETFs, and so forth. I wanted to point out just a couple here. First, on the transports, you can see the transports in that little mini chart. Threatening breakout, not getting there. I want to show you a bigger chart here in just a minute. And also the small caps, the small cap 600, same thing. So there are a few reasons why I think the market is pausing. I think it's actually a pretty good thing. I've been pointing out to Earnings Beats members in my daily market report that there's a negative divergence on the S&P 500. Well, that negative divergence also is on the Dow. And you can see that here. This is just a 60-minute chart, so it's a short-term momentum issue. Here we break out on the Dow. This was Thursday of last week. And with that breakout, you can see the PPO did not move up and take out that prior high. That is a negative divergence. Higher price, lower PPO. Usually what you see is either selling or consolidation to bring the PPO back down close to the center line and to bring price action back down to about the 50-period SMA. If you go back and you look, we saw this in October. There's your lower PPO, higher price. This actually went below the 50. We saw sideways consolidation, although we never took out this prior low. So it was a higher high, then established a low, another higher high. We never went back down below this low on a closing basis, if you will. But then there we had another one right here when we broke out October 30th. See that breakout with the lower PPO? Back down again. This one just went back to the center line, back to the 50-hour, and then we started moving back up again. But this negative divergence, I think, could lead to a little bit more sideways action. I believe the market is going higher. But short term, could we see a move back down 27.5? Yeah, I think it's possible. It's a couple hundred points. It's less than 1%. Okay, let's look at that transportation chart. Here's a 2-year chart. One of the reasons why the market's struggling here just a little bit is we've seen the transports get up and move intraday to a new 2019 high, but couldn't hold it into the close, and now we're consolidating. Watch that rising 20-day moving average. Want to also mention seasonality for the transports. If we go back and we look at this chart, notice October, beginning of October, we started this big run, November moving to new highs. Check out the seasonality over the last 20 years. Transports have gone up in the month of October 75% of the months, November 85% of the months. And look at the returns here. These 2 months, 5.7%, which is better than any 2 months of the year, any 2 consecutive months of the year. So we're in a sweet spot right now for the transports. As far as the small caps go, you can see here, same thing, trying to get through all of this overhead resistance. between about 990 and 1,000. Last week we got up into the 990s, well into the 990s. Couldn't close there though, and now we're just kind of pausing, resting. Again, watch that rising 20-day. If we hold that and break above 1,000, I think that is very, very bullish. One other thing I mentioned, I think this was in my blog yesterday, industrials relative to the S&P 500. You can look at this relative chart. This isn't the XLI. This is the XLI versus the S&P 500. This is a ratio. Notice when I don't have the S&P 500 on here, but when we consolidated on the S&P 500 back in 2011 and 2012, industrial struggled on a relative basis. When we consolidated on the S&P 500 back in the second half of 2014 into early 2016, the industrial struggled on a relative basis. And the past 2 years, while we have been going through all these gyrations back and forth, we've struggled on the S&P 500. We've also struggled on the industrials relative. However, once we get this breakout of these downtrends, you can see it over here, the breakout. We took off in 2016. Here, the downtrend, we took off in 2013. These were very strong periods for the S&P 500. I think that's very notable that we have broken this downtrend. These downtrends, as you look back, tend to last about 1.5 to 2 years during a secular bull market. And that gives the market time to consolidate, pause, catch its breath before it makes another big run. I think we're on the verge of making another big run. I think we're in the process, and this is one of the reasons why. All right, I mentioned Boeing earlier, so I just wanted to show you this chart. I'm not overall excited with Boeing. And if you look at the relative strength, here's the aerospace group, not far from a breakout, but Boeing has been going lower and lower. And so on a relative basis, we just set 52-week relative lows in Boeing relative to the aerospace group. So if you like aerospace and it breaks out, that's fine. I'd look for something else. I think Boeing still got a lot of work to do. Yesterday was a nice day. Maybe this is the start of an uptrend, but we've seen this show before. Since we had the big gap down in March on that 737 fiasco, we have not been able to get through about 395. Each one of these moves to the upside has been head fakes. I would be really careful with Boeing at this point. All right, let's move into earnings. Of course, earnings are starting to slow down, but we do still have a number of charts and companies that are reporting. I want to show you some charts. The first one, this is DXC, DXC Technology Company. They reported last night after the bell. Look at the chart. Been going down for quite some time. Stock earlier this year was 68, and just recently we were down to about 26. That's a pretty big drop, and you can see that in the relative strength, just a horrible performer. They missed on their top line, missed on their bottom line. Stock was up about 3% in pre-market. I think probably it's just a dead cat bounce. I wouldn't trust it at this point, especially with all of this distribution that's been taking place. I don't know. This one's still got a lot of work to do. ICUI. This one actually looks pretty good. I didn't see an actual trade when I was looking earlier this morning, but I saw the bid was up quite a bit over yesterday's close, close to 10% higher. The stock, as you look at it, has not been doing much. In fact, I don't think the market was expecting much out of this company. It is in that medical supply area. They easily beat on their top line, beat on their bottom line. And like I said, they are bidding much higher, like around 180 today. So this one's going to be an interesting to watch. This could be a big day because there's not a lot of overhead resistance until you get all the way up to 210. So if we get that move up, maybe we start to pull back. Remember, market makers are on the other side of the trade. So when everybody wants to buy at the open, they are the ones providing liquidity on the sell side. So I wouldn't be surprised a short-term pullback, but if it pulls back and then moves back up to a new high, I think that would be a clue. This could be running toward 210. Next up, Tyson. This is this morning. Tyson Foods came out. Missed on their top line, missed on their bottom line. The stock is down about 4% pre-market. I would watch 77.5. When I was looking earlier, it was still above that level. I think it was 79 and change. But if we lose 77.5, that, in my opinion, would be bad news. Rockwell Automation. This is a really, really strong report that just came out here. They beat top line by a mile, 1.73 billion versus 1.66 billion. Bottom line, 201 versus a $1.92. Stock is up almost 10% pre-market action. They guided fiscal year 20 revenues and earnings per share higher. They are in the industrial machinery group, which has broken out and has been showing tremendous relative strength. Just at the beginning of this month, moving to about a 6-7 month relative high to the S&P 500. And now you have a leader here emerging with Rockwell Automation. This is one that would certainly be on my watch list going forward. Let's pull up one more here. I'm going to pull up, let's look at IIVI. This was a mixed report. They beat on their top line. They missed their bottom line, 57 cents versus 60. They were down 5.43% pre-market. They guided Q2 revenues and earnings per share lower. And the stock, look at this, it was near a 52-week relative high 3 months ago. Selling took place throughout the quarter, and look at the volume that was coming out. That is unmistakable. When I see relative weakness like this, and it's on heavy volume, that to me is a sign of distribution. I don't care about this little rally on light volume. This was not a good-looking chart going into earnings, and now we know why. They are guiding lower going forward, missed their earnings, and stock down 5.5% pre-market. All right, let's move on to upgrades and downgrades. The first one's a small company, but I wanted to mention this because it is an upgrade. It is on my strong earnings chart list. Look at these 3 big volume days and those 3 white soldiers. If you're a candlestick fan, those are really nice. Not only are they 3 white soldiers, those are 3 Maribozu candles. A Maribozu candle is a candle in which you open on the low and you close on the high. A lot of times you see these intraday moves up, these long tails or wicks, whatever you want to call them. That's because intraday they're trading higher and they come back down and close well below. Notice there are no tails on these 3 candles. That is an indication of accumulation to me. Stock pulls back, maybe a little bit of a cup. Today gets upgraded. I think this one is looking to go higher. I think it's a really nice looking chart, and it is in the biotech space where biotechs have been really performing well. In fact, I wanted to mention SunTrust this morning initiated several biotechs. On the buy side, ALXN, AMGN, of course that's Amgen, the first was Alexion, Biogen, BIIB, Biomarin, BMRN, BTAI, Bioxis, I think, I'm not sure of the name there. Fate, which I think is Fate Therapeutics, FATE. These are all buys out of SunTrust. MNTA, I'm going to show you this one. MNTA, because this one's been a very strong performer. It's been moving up for the last few months. Even while biotechs were moving down, the stock was moving up, and you can see the relative strength. Momentum or Momenta Pharmaceutical, certainly one of the stronger ones. PTCT was a buy, and then the other one I want to show you is Vertex. This is probably my favorite, I would say, right now among these biotechs, breaking out to a new 52-week high. The group is strong. Look at the volume coming in, so that is supporting this move to the upside. And if we look at a longer-term monthly chart on VRTX, you can see we've been in this uptrend. The last couple years, though, it's been sideways. We're just getting the breakout here on this weekly chart. So I think it looks pretty good. Now, they also did initiate 2 biotechs with a hold. The first one is Gilead, G-I-L-D. So let's take a look at Gilead. Just been going sideways, relative weakness here. I can kind of see why that one would be a hold. The other one they put a hold on, I actually own. I'm really surprised. Regeneron, R-E-G-N. This is one of my favorites coming from the ashes, if you will. This is a stock. You can see the biotechs were going down. REGN was one of the worst performers in the biotechs. But over the past 6 weeks or so, you can see that there's been relative strength. We've moved to about a 6-month relative high. And during this relative strength, check out the volume. It's been very positive to the upside. They also just came out with earnings, beat top and bottom line. I really like the stock. I do not agree with this one being a hold. I think it's a buy. But again, full disclosure, I do own it. A pullback down into that 323, 325 area where it gapped up on earnings would probably be best entry. Okay, we're going to go into scooter movers. And I wanted to show you how you can use the scooter movers and scooter summary. I'm going to go back first and just show you where you can find the scooter report. So over here, if you're a member, under the member tools on your dashboard, right down here, you go under summary pages. So it's right where you see your sector summary, industry summary, the new cryptocurrency summary. Here is scooter reports. Click on this, and I just want to show you a couple things that you can do with this. The first thing you can do is, this is large cap. So you can see what the top large cap stocks are in terms of scooter scores. And scooter scores are just StockCharts technical rank. You can search this here at StockCharts to find out the formula, but it is just a formula. Nothing, it's just mechanical. It only looks back really over about the last 5 or 6 months. Doesn't go back much further than that. So if you've got a stock that's really starting to show significant rate of change over the last couple months to about 5 months, then you're going to rank pretty high in this system. But there's more to it than that. You want to check that out. But here's the large cap. I can go to mid cap. I can go to small cap. I can also do the ETFs. So if you're an ETF trader, you can find out what's been working. There's a lot of great tools that you can use in here. I'm going to go back to the large cap for a minute, because I also want to show you that you can not only sort this in terms of scooter, but you can sort it based on the change in the scooter. So you can see what really got hit yesterday in terms of scooter. And then you can also find out what's really making a move. You can see Boeing had a big day yesterday. The scooter jumped from 22 up to 46. So it went up 24 points. Walgreens, that's the other one that was in that leveraged buyout. You can see also making a big move. The other thing you can do is change this intraday to 1 week. So now you can look at what the scooter has done, the change over the past week, which maybe gives you a little bit better feel for what's moving. You can see REGN is one of the top movers there. The scooter now 75. It was down around 24. So big move there. But this will just give you a sense of, over the last week, some of the stocks that have been moving. Now, you can take this one more step further, and I think this is really cool. You can click on the industry or the sector. So let's say aerospace. Let's say aerospace is breaking out, and you don't really like Boeing, but you want to know what other aerospace stocks are moving. Well, TransDigm, just over the last week now, has moved to 10, and look at their scooter score. Their scooter score is at 89.1 as opposed to 46. So this is going to be a much better performer. Let's see what that chart looks like. And you'll see a much different picture. You got an uptrend. You got all this sideways consolidation, and it's just making this breakout over 540. So TransDigm looks pretty good. And when we pull it up on a relative chart, clearly it's in a much better position versus its peers. It's been in this long-term uptrend for a while now. Now, I'd like to see maybe a little bit more volume on a real confirmed breakout above 540, but there's no doubt in my mind TDG looks much better to me than, say, Boeing. So, but you could do that for every group. So again, apparel retailers, if you think apparel retailers are strengthening, that's where you want to go. You can look it up. I've talked a lot about industrials. So how about we just click on the sector and we go find industrials down here. And there are industrials. So now I've got the change. Actually, it's still going to do it by industry. Let me do this again. Let's do the change and then do the sector. And actually, let's get that positive. Okay, then do the sector. Now let's come down and do this again. All right, so now within the industrials, I can look at all of the industrials, all the different industry groups, and I can see which stocks have had the biggest moves in the last week on their scooter. Oh, actually, it reverted back. No, it didn't. There's 1 week. Okay, so it'll give me all of those industrials. So let's go back down here again. And you can see the Boeing's first. This Huntington Ingalls, this is a smaller, well, I don't know that it's that small. It's still in the large caps. But let's go ahead and pull this one up. It's in the defense area. Now, many of the defense stocks have been hit. I can pull up, first, let's look at the relative chart here. You can see a beautiful breakout here, by the way, in this defense stock, breaking to a new 52-week relative high. I know that there are others out there like Lockheed Martin. If we pull them up, they already made their run and they're consolidating. So they're starting to lose a little bit of relative strength versus the defense peers, as opposed to gaining relative strength as Huntington has been doing. But I think you can just look at this and get a pretty good sense of how you can go back and use these scooter reports to find scooter movers. And not only movers, but you can adjust it by intraday to a week. And then also you can click on these columns and you can go into individual sectors, industry groups, whatever it is that you want to do. I mean, maybe you want to do it alphabetically. I don't know why, but maybe you'd want to look at the alphabet. A lot of different uses here. All right, let's wrap this show up with 3 you must see. 3 you must see. I love doing this segment because I do like to focus on things that just look like they matter for today's trading. One stock that I'm going to pull up for you is X-Ray. This is Dentsply International, and the stock, if you're just looking at it on the 6-month chart, gapped up with earnings. Looked like it was breaking out. Stock went from 55.5 up over $60. Big volume. Well, what did we talk about with market makers? They're on the other side of the trade. A lot of times you get those pullbacks short term. X-Ray all the way back down now to gap support. This is going to be an interesting area between here and that 20-day moving average. I would expect it to hold and move higher. So X-Ray is my number 3 chart of the 1 you must see, or of the 3 you must see. And if we annotate here, you will see a beautiful move up. This is a cup, failed breakout, and I think we're coming down into a handle. Gap support in that 20-day moving average, worth watching. All right, let's go ahead and save this one. Next up, this is a little one. So if you like the smaller companies, if you're risk intolerant, just maybe skip this and don't listen to me. But if you like the rolling the dice and you like that casino kind of investing or trading, DRRX, Direct Corp, big move yesterday. Look at the volume expand. This is a stock that had been a big move up, pulled back to the 50, kind of been going sideways, but we broke to about a 6-week high, and we did it on increasing volume. I think this one's got a chance to make a run for that 250 area. So let me annotate this. And that was the high, right just beneath 250 up there. So I think that's where we could make a run. Here was the breakout that we just saw. This was that reaction high. Let's see this double bottom right here, coming back up, setting that high, now putting in the higher lows, holding that 50-day moving average, and now breaking back up with volume expanding. This is one that is going to be interesting to watch today for sure. Might get a short-term pullback back to around that $2 area, but I think we're going to go higher, and I think 245 could be in play here on DRRX. So let's go ahead and save this one. And then we'll get into the last one, which is Goldman Sachs. Goldman Sachs here, I'm going to go back maybe add a year. Let's go back and look at the 2-year chart. I've talked about Goldman Sachs recently, a lot more money moving into financials. We had a false breakout here above the 220 level, failed, coming back down. I think that rising 20-day moving average is going to hold. We do see that we had bottomed on Goldman Sachs relative to investment services at the end of 2018. Just set a new high for this year, relative high. I think it looks good. So Goldman Sachs is one you want to certainly keep an eye on. All right, that is it for today. I really want to thank everybody for joining me today. Remember to tune in to Trading Places Live here on StockCharts TV every Tuesday and Thursday from 9 to 9:30 a.m. Eastern. Mondays and Wednesdays, you can catch me over at earningsbeats.com. So make sure you check that out. All right, everybody have a great day. Happy trading. Enjoy the day. See you back here on Thursday.